Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs, reacting to weekly news on startups, VC funds, and investment rounds. We've had a very busy week in MENA and lots of news to react to. From 24 Fintech, that's still going today, to Tabby acquiring Tweeq, Tarabut acquiring Vyne, Ziina raising $22 million Series A, and Malaa raising $17.3 million, and more. We have a busy episode for you today with Hasan Haider, founder and managing partner at Plus VC, Karim Samakie, advisor at Fintech Saudi, and Kevin Holliday, managing director at C3. In the video description, you will find more details on our guests, their LinkedIn profiles, and links to their company's websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in MENA, startups, VCs, and tech space. And as always, from FWDstart, we have my co-host, Jamie. And Jamie, let's change things a little bit today. Before we dig into the news of the week, are there any big events happening soon?
Well, yes, in fact, there is, Ahmed. I thought you'd never ask. I'm very happy to announce that this episode is brought to you by the wonderful people at Super Return Middle East, which is taking place from the 14th to the 16th of October, 2024 at the Ritz-Carlton in Dubai. So Super Return Middle East brings you face-to-face with the regional and international investment community. You'll have the opportunity to connect with over 500 senior private label executives from over 20 countries to discover where the region's most influential investors are looking to do deals. These executives include founders, CEOs, managing directors in the investment community. So this is your chance to grow your network and expand opportunities by connecting with over 175 LPs and 200 GPs. Confirmed speakers include KfW Capital, Headway Capital Partners, Middle East Venture Partners, Venture Souk, and I believe one of our guests today will also be speaking at the event, Hasan from Plus VC. So all the more reason to book your ticket. So I'm thrilled to share that kind folks at Super Return Middle East, they've given us a VIP code, so that gives you 10% off your ticket price. Just quote FKR 3559 FWDS to save 10%. That really rolls off the tongue.
We'll have that code in the description. Oh, and by the way, for an aggregation of all startup and VC related events across MENA, check out SVVI, MENA VC Events Calendar. It has everything. As you can see here, I'll provide the link in the description of the video. It has all the events up until next year, early next year, up until May next year. And then they dig deeper into the details of those events and who should attend these events. Like here, highly recommended for meeting LPs, highly recommended for meeting VCs, and then highly recommended events for meeting startups or founders if you're a VC. It's an amazing effort. Thank you so much, SBPI, for aggregating all these events together. Speaking of events, we had a very big success story in 24 Fintech. I just came back from Riyadh. I attended the first 2 days. I want to hear from our guests. So Karim and Hasan, I know you've been there. I saw you there. Kevin, did you attend?
No, unfortunately, actually, I missed the event. It was a conflict, and I was here in the UAE yesterday and the day before. But I've heard some very good feedback overall from the ecosystem, and yeah, happy to share some news. But maybe let my other esteemed panelists talk about the event itself.
We will hear from Karim last because he is part of the organization of this event. Fintech Saudi organized this event, so he is biased, of course. So let's hear from Hasan. I want the truth, Hasan. How was the event?
It was actually pretty good. You know, in this age of events getting bigger and bigger and messier and disorganized, this was actually a pretty well-organized event. It was probably the right size as well. You actually got the chance to talk to people and build real connections and stuff. It was good. Yeah, I caught up with a lot of folks, met new startups, did all the stuff you do at events. Walked a lot. I think I got my steps in for the days.
Me too.
Yeah, it was good. I actually really enjoyed it.
You know what? I just want to say, and this coming from Hasan is important because Hasan has not only organized events and has been to many events. And coming from Hasan, this is a positive testament. And I'll take that.
Yeah, if it was crap, I would have said, but you know,
I know you would have.
He is, I think, the event, the mainstay.
You gotta be present. You gotta talk to people, I think, in our industry. Good stuff. No, it's good. I enjoyed it. I hope they don't make it too big next year, and then it
I hope
becomes.
so too.
It
Yeah,
becomes.
you know what? It was the perfect size. It's not too big. Like Leap, for example, it was really too big and
Yeah.
overwhelming. For this one, I was able to know where things are, move from one stage to another quickly. The location was great. It's not like an hour away from the city. And the venue map was easier to understand. The content was great, and quality of the startups participating was amazing. I think it's because this event is focused only on this industry. It's a fintech focused event. I think Leap was very overwhelming because it has everything together. I don't know, Karim, how many people attended this event?
So we don't have the official numbers yet, so I can't give you any numbers. But it, like you said, Ahmad, it was very focused, and that was part of the design. And it's by design. We wanted it to be focused. We wanted only relevant people to show up at this event. We didn't want to spread it out and invite anyone and everyone and broadcast those messages. We wanted the people attending to have useful, fruitful conversations. As you've seen, everyone attending day 1, day 2, and as of now, day 3, are people within the financial sector, the fintech sector, the VCs, the startups. So it's the right sort of target audience that was brought in. And Hasan, I assure you that based on the feedback that we're getting and the direction for this event, it's not expected to become the next Leap. Yeah, we don't want it to be as big as that. Definitely not. It's going to stay focused. It's going to be purely fintech focused as well. We've seen a lot of events around the world. They start as fintech and then they sort of add e-commerce, they add digital marketing, and it sort of expands and becomes a bit scattered in terms of relevance. We're gonna hopefully try to keep this as fintech focused as possible and build on the success that you were talking about. We're still waiting for our overall results.
Yes, Kevin, what did you hear about it in Dubai?
Yeah, I think that's a great point, right? Is to try to keep it focused and bringing together the right stakeholders, from policymakers, regulators, investors, tech, and academia. They all have a role to play in the ecosystem. So if you can, keep the size and the sort of topics very relevant, then I think ultimately you're going to gain the awareness. Great sponsors, the positioning of Saudi and the wider region as becoming a major fintech hub, clear with the goals with 2030 aligned in trying to diversify away from a very oil-based economy. So I think from my perspective the feedback was good. There's a big push on helping and supporting the unbanked, which is a huge issue in the kingdom itself, and I think overall I think there's some good feedback. I've generally heard very good from attendees, and I think if that's the goal going forward, as Karim said, I think that would be fantastic.
Amazing. And Hasan, very quickly, I know you participated in a panel discussion on optimizing VC funding for founders and startups. You were advising companies on how to identify funding sources, prepare for investment rounds, and build investor relationships. Can you give us like a quick 2-minute takeaways of that panel discussion?
I don't remember, but
okay.
I can talk to somebody else if you want. I don't know. My general feedback's probably the same. I think we were talking about how things are hard, and it is quite hard for startups to raise in this environment. But I think things are going to get better with interest rates likely to fall. There's going to be more funding coming towards venture capital and all of that. So we're going to enter this cycle again. We're sort of probably at the bottom. So fundraising has been hard. It's taken longer. There's a higher bar than there was before in order to raise any money. So not the easiest environment to raise.
Is the environment still hard for VCs as well to raise from LPs?
Yeah, honestly speaking, it's always been difficult. There's not a large financially motivated LP base in the MENA region, right? So whereas in the US, you've got endowments, you've got a lot of family offices that put a lot of money towards venture capital as an asset class. There's a lot of funds and a lot of funding that comes into a market like that. But in our region, we don't really have that. We've got a couple of development financing institutions that are supporting venture capital, but their incentives are not really aligned with good fund managers. They're not, they're like, we'll give you money, put money into our country or whatever, but that doesn't result in the best possible returns for VC, which probably in the longer run is probably no more negative than positive. In the short run, it's been super positive because it's attracted a lot more people to start becoming venture capitalists and stuff. But yeah, it's hard to raise. It's the story, like whenever I'm talking to any other fund manager, we're always commiserating about, oh, who are you talking to? How's fundraising going? And it's not the easiest thing. So we need more financially driven pools of capital to come towards venture capital. So not development financing money. It's like, yeah, I really think that this is an asset class that I'm going to make money on. And I think that's what we're missing. When you go to a lot of the institutional investors, they're just too big. Like VC in the region, the funds are small. They're maybe $100 to $150 million max. Those are the larger funds, maybe up to 200 now, but they can't absorb, these $50, $100 million checks that some of the larger sovereign wealth funds want to do it. So yeah, it's hard for everyone, I think, but that's what makes it fun, right?
Of course. And Karim, I think you moderated a panel on the valuations, the ups and downs and roller coaster road for valuations. Can I ask you for the same thing? Just a 2-minute quick summary or takeaways from that conversation?
And I think our panelist and Hasan can add on to that. Yeah, he sort of comes from the same background. Our panelist's main insights was react fast, because react fast because you see the effects of that reaction 18 months down the line. It's not immediate, right? You're optimizing for cost, you're optimizing for revenue. Now for you to see the results in 12 to 18 months, if not more. And if you take your time there, you're gonna struggle. And I think that was one of the main outcomes of the panel. I think this is the other thing was try to ensure that whenever you are raising funding, and that's for obviously the startups and fintechs in general, not to go for valuation. Like here, there's this perception that the higher the valuation, the better it is. But valuation is your future valuation based on what you will do with the money that you're going to be receiving from those investors. So if you don't hit those KPIs and you don't hit that valuation, you're the one that's going to be suffering as a founder of a company. So I think those were the main two outcomes that came out of this discussion.
There was one about the unit economics and focusing on profitability.
Focusing on profitability versus growth. And that's one question I wanted to shoot back at Hasan, honestly, Ahmad, because with the fundraising potentially becoming a little easier with interest rates going down, Hasan, do you think the VC mindset is set now for unit economic optimization, revenues, and profits, or are we going to go back to grow no matter what?
I think venture capitalists have a short memory. Yeah, I don't even remember the panel I was on 2 days ago. So I think we're trained to forget bad things. But in general, I'm hoping we don't go back to the madness that we saw in 21, 22, because it was honestly ridiculous. Like there were startups which were never ever gonna get to positive unit economics. We're getting all this money from VCs. Yeah. Like just looking at it, I was like, the valuation is stupid. That's a lot of money, and why? So the question marks were there, but thankfully, like over the past 2 years, I'm actually quite happy with what's been happening, and people have gone back to a semblance of sanity, I guess. I'm an oxymoron. I'm a conservative venture capitalist, I guess is the way I look at it. But no, I think honestly speaking, I hope, and I don't think we're gonna go back to growth at all costs. I think people are gonna be more aware in our region that you need to look at unit economics at least, and have at least from that perspective needs to be positive. But people have
Kevin, what do you think? growth versus profitability. You invest in early stage.
Yeah,
What do you think?
exactly. So you're absolutely right. And Hasan, went through those tough times, or not tough times, but so much as the bubble in the crazy valuations. But I think there's a moment now that there's a focus on resilience, right? The founders, especially at an early stage, are the big bet for any investor, and the ability to demonstrate there is a resilience that you can build a business and not just rely on raising capital to fuel growth, right? So there is a little bit more, I think, in terms of breaking down at that earlier stage in terms of what is actually your strategy. It's not just throw around capital and try and grow in every single market. It's like focus on your home market, crack your home market, look at how you can expand outside of that, and really try to think about the team and build the team rather than just bringing people on because you have the money available. So I think, in times of such we are now, the better businesses are ultimately, built. So I think we can see, now there is that focus on. There will be some, winners and losers as always, but I think there'll be a general acceptance that the region is building stronger businesses that will be around for the longer term.
Built to last, not to get VC funding.
Yeah, exactly. No, it's always it's been in the entrepreneur's mindset for the last few years is that VC, right? It's like we need money. Where can we get it from? As opposed to thinking about other options strategically outside of just the VC route, and being a little bit more conscious of that longer term play and getting in bed with the right investor as opposed to just taking the cash at the first opportunity.
Okay, now it's time for shameless self-promotion. I'm super excited to share with you this book, VC Evolve, Navigating the Art, Science, and Future of Venture Capital in an Ever-Evolving Startup Frontier. It's basically my humble attempt to create a textbook in venture capital. Yeah, I know, a textbook, who do you think you are? Seriously though, this project has been a journey of discovery and learning, bringing together everything I've learned from my experience in venture over the past 15 years. It's not about my personal experience. It's just a collection and aggregation of the knowledge I gained in that industry. Again, it's textbook style with specifics and case studies. It's everything I wish I had when I started my career in venture. I've also included a section on how VCs can utilize data science, machine learning, and AI in their operations and their investment process. Whether you're a seasoned VC, new to venture, or an angel investor, or just curious about venture capital, I hope this book serves as a trusted companion on your journey. So, Jamie, did you do this on purpose? You have all 4 stories related to fintech companies, or it just happened this week? You have a lot of stories. Tell us.
I couldn't help myself, but there's more as well. I mean, it's a hectic week when you bump the 60 million Series C out of the running order. But I mean, that's where we're at. Yeah, let's start. I mean, I think the headline grabber for me is Tabby's acquisition. So maybe let's kick things off there on the buy now, pay later, or possibly more, it would seem. So yeah, they've acquired Tweeq, the Saudi-based digital wallet, who are crucially, I think, licensed by the Saudi Central Bank. So financial details of the transaction were not disclosed. It's the first acquisition by Tabby to date as well, obviously founded in 2019. As I mentioned, buy now, pay later fintech, 6 billion annualized transaction volume, last raise 200 million Series D back in November of last year. Tweeq then was founded in 2020, so it was one of the early electronic money institutions licensed to operate in Saudi. So alternative to traditional banking accounts. So basically it's an app, allows users to transfer money to other mobile wallets or bank accounts within Saudi. You can also use their card for online or in-store transactions. Tweeq, they've raised, it was a 7-figure round from STV and Raid Ventures, both of which were early investors in Tabby as well. So presumably the move obviously is going to allow Tabby to offer different digital banking services in Saudi. 80% of the client base of 14 million are based there, relocated headquarters last year. After that, 60 million Series D. And look, interestingly, not to be outdone, Tamara as well. They received their preliminary approval from Saudi Central Bank as well for consumer finance license. So yeah, competition heating up.
So my question is, why Tweeq? I mean, it's a relatively small digital wallet and with limited funding, small team. Was this more of a acqui-hire to bring talent in, or was the main goal to get the license that they have, or is it their technology? What's happening there? What do you think?
It's nice that STV is on the cap table of both. You know,
Do you think that was influenced by the investors?
yeah, for sure, man. Like, whenever you see one of these things where, hey, I've got a super amazing winner in my portfolio, and then disclaimer, I don't actually know any details related to Tabby or Tweeq's acquisition, so I'm not going to comment on that directly. But you know, whenever a founder, a fund has a success, story in their portfolio, and they've got one portfolio company that they put quite a bit of money in, but isn't quite doing what they were meant to be doing, or isn't quite executing as well as they should be. A nice way to not lose all of your money is to say, hey, you're big. Why don't you acquire this little thing that we've got here? And it'll be nice news for you. You can add to the team. You can maybe add some of the software there, but it's likely not a super amazing exit, and it's probably not gonna be great for the investors. Usually you see this happen a lot, but it's nice. Exits are always good. We always need more exits in our region.
Yeah, especially consolidation within the same market. I love that.
I disagree. I disagree a bit with Hasan, honestly, on this one. I think it's the evolution of the business model for Tabby. It's opening up new doors for them. If you look at Klarna and what the journey that Klarna has gone into, and Tabby needs that EMI license. And Tweeq, yeah, okay, maybe they haven't really performed as well as they should have without, like, I don't know what their KPIs were supposed to be, but I think it complements the business model, and it allows Tabby to move to that next level of not just offering buy now, pay later, but getting into offering other products as well, and growing that market, growing that segment of their offering.
Excellent. Yeah, that sounds great. So I think you're right. I'm wrong. So just ignore
no. I'm just disagreeing. It doesn't mean I'm right and you're wrong.
100% wrong.
Let's agree to disagree.
I think Karim's right. Like, everyone should listen to him.
Okay, Kevin, we need you to break the tie here.
Yeah,
it's not tie. It's actually a disagreement. Let's see if you agree with Hasan or with Karim.
With Karim now. His story was great. I actually liked it.
Yeah, exactly. Yeah, look, I can see I'll be very diplomatic. I can see the potential on both sides in terms of, I think there is some synergies there clearly, right? We've mentioned in terms of what they want to do and maybe get ahead of their on the ground activities when it comes to mobile first banking, etc. So I think ultimately it's not a big acquisition as Hasan mentioned, but then sometimes that's actually quite easier as a startup in a way. No, Tabby is at the later stage, but going for more aggressive acquisitions can be a bit of a headache. So I think there is some movement which aligns with their comprehensive financial offerings to a user base and leveraging the Tweeq platform to try and look at enhancing their sort of customer engagement and payment flexibility, etc. So yeah, I can see there is some relevance to the overall acquisition, despite some of the things in the background as Hasan mentioned.
Yeah, I think in general we need more of this, right? So like we've got winners in our market that are getting to unicorn valuations. And historically, what you see is that, it's tech startups that acquire other tech startups. So, we haven't really seen a lot of smaller acquisitions, acqui-hires and things in the region as much as we should. And I think it's encouraging to see this happen. And I think I want more of this to happen, right? And there's a lot of amazing founders that have built cool stuff, but they've reached a plateau, and now it's time for them to figure out an exit. And I think the later stage deals should be actively looking for these sort of opportunities, especially in an environment like this. So why not? Like, I think this is good, and I want to see more.
Yeah, the valuations
That's
are
what-
maybe
that-
at the
that-
bottom now. So are we going
Yeah.
to see more consolidations, or do we think we're heading into a red ocean market where companies will start killing each other and we will see more shutdowns?
I think
we'll
we're
see
going to see
more.
so many
Yeah.
shutdowns. But like our region, they'll just be quiet. Like no one's going to be like, oh, this company died. It'll just like die a quiet death somewhere, and like no one will have realized. And they probably raise a couple of $1 million. Their investors would have written them off a year or two ago. So, no one will be too worried. There'll be a lot of deaths, I think, in startup land this year and next year.
Yeah, I think
Okay.
also you're right in the fintech landscape. I think obviously it's been very topical over the last few years, and there's been so many, in this ecosystem. It's natural that the few are going to be towards the top, but I think where there's a world now, the consolidation is a potential, because as a founder, you always think, okay, I'll invent this amazing fintech solution that one day I'll be taken over by a big player, and then that gets lost a little bit through their journey because they start to raise at massive valuations and think that they can become instantly the main player. But I think in this environment, I think there will be more consolidation.
Okay, let's keep a fast pace. Jamie, what's up next?
Yeah, let's go for another acquisition. So Tarabut, a UAE-based open banking platform, they've acquired a London-based fintech called Vyne. Tarabut, founded in Bahrain in 2019, connects a regional network of banks and fintechs via a universal API interface. They last closed a Series A round back in May 2023, $32 million. That was led by Pinnacle Capital, participation from Visa, Tiger Global, and a whole host of other investors. Vyne, on the other hand, which was founded in the same year, interestingly in 2019 as well. They're a real-time account-to-account payments platform for online businesses. So customers can move money in real time, paying directly from their bank account. So bypasses the sort of expensive and more traditional methods. They claim to have processed over £1 billion in transactions over the course of the last 5 years. They raised 15.5 million in seed funding back in the day, which was the largest round for an open banking platform in the UK at the time.
Okay, so we have now a slightly different case, a company from the MENA region acquiring a European company. Are we going to see more of that? Are we going global with our acquisitions? Like Vyne has European clients and they processed, you said, $1 billion worth of movements.
I don't know. Maybe we'll see a bunch of this, but I doubt it. But I think one thing that we're seeing is that a lot of European investors have been spending a lot more time looking at deals here in the MENA region. Like we've seen Europe as a market, it's slow growth, it's stagnant. The demographics are the complete opposite of the MENA region. An older population, not a younger population like we have here. And we're seeing a lot more European investors actually coming into the market, which is quite interesting to see. So our market is quite close to theirs in terms of geography and flights, but offers amazing growth and probably a bit better weather from their perspective. I like European weather more. They like the sun for some reason. But yeah, I think we're probably going to see a lot more collaboration between Europe and the Middle East. Historically, it's been European investors investing in development financing in the region, especially in Egypt and Jordan. But I think we're going to see a lot more, real business take place. But I don't know what was the story behind this one, but it seems like there's definitely an interesting opportunity to merge these entities to build a bigger EMEA sort of player, I guess.
Yeah, no, again, from my side, not too close to this deal specifically, but as Hasan mentioned, I think we probably see more of the European investors being more of a, I guess, disclosed type of deals. We see a lot of, DFIs, etc., coming through in terms of foundational related fund activity in very critical areas, but less on the sort of acquisition and VC route in the headline, right? So there is European money there. They want to maximize a little bit more than the tough returns that are happening in Europe, and it's only great for the region that we're able to see more of this happen. I guess from a perspective, it doesn't happen very often in terms of acquiring UK related. It's generally the other way if they're looking to expand here in the region, but I think it's a plus overall.
I don't know. I don't know if
Okay.
this is somewhat related to the latest announcement, at least here in Saudi Arabia, with regards to payment initiation when it comes to open banking. And I believe maybe Vyne brings a bit of experience, more experience in that field, and just made sense for Tarabut to acquire that. But don't have too much detail on that one or insights to comment more on that. But I think it has to do something with that.
Okay, so in open banking, I know that there is two types of companies or service providers: account information, that's just read only, and there's payment initiation that facilitates payment. So maybe Vyne has more experience in the payment and they have a license in that, but Tarabut has the license and the experience in the account information. The marriage makes more sense. Which takes me to ask, can someone explain to us open banking? What is it? Why is it needed? Why it's so important?
How deep do you want to go?
Yeah, I think Karim would probably be the best person to do this. I can tell you from an idiot's perspective what it means. Like, you want that? Like, basically, if you're a fintech
as the name suggests, as in terms of open bank, right?
yeah, exactly. Right? If you're a fintech company or doing anything with people's finances, you need access to their bank accounts. So rather than going in and trying to sign an agreement with every single bank that you need to work with, open banking allows you to basically get access to data from all the different banks and stuff through a single platform. At least that's my understanding. Karim?
That's accurate from one side, Hasan, and very useful for the fintechs. It's also a way for the consumer to actually have control on who they're sharing their data with. So there's that opportunity to consent to sharing data and to consent to have that entity transact on your behalf, again, with your approval. But more importantly, you can revoke, right? So that ability to revoke that access is also as important. But it opens a lot of doors, open banking, and in general, it opens a lot of doors for consumer credit rating, for SME credit rating as well, like business credit rating. When you see you're able to get that information and process that information, the advertised value proposition is that it will facilitate financing, facilitate access to financial products, because you are giving that information out willingly, and you still have control over your data. And that's sort of in a nutshell. To add to, and my explanation is also from an idiot's perspective as well. I'll take that as that.
Well, is it bad for Visa and MasterCard? What other payment rails does it threaten? Like if I want to pay something, it's either I use the cards, Visa, MasterCard, or I wire money to someone. Now there's all these new applications like Venmo and Ziina. We'll talk about Ziina in a minute. Is it threatening Visa and MasterCard? I know Visa wanted to buy or acquire Plaid for like $5 billion, and then Plaid said, "Hey, we worth more," and they walked out of the deal.
No, it was actually, I think it was more competition sort of thing. I think that's why the deal was.
Oh, okay. So compliance and regulations and
regulations.
But in general, is open banking good or bad for Visa and MasterCard?
I think Visa and MasterCard have been pretty good at actually establishing relationships with a lot of startups across the region. Actually,
exactly.
We're seeing them really active, really supportive for a lot of companies. So I think they're figuring out ways to continue to stay relevant and still work within the ecosystem.
I think generally it's a good thing. I think obviously, as Hasan mentioned, Visa and MasterCard, they are very active in the startup ecosystem across the Middle East and Africa specifically, where they're trying to help and support that integration at the early stage. But the whole open banking, from my perspective, has been driven by customer need, right? It's to improve the experience of a sector that has had a lot of troubles over the years and has probably been the last one to be fully disrupted. So giving that ease, as Karim mentioned, also the ability to bank the unbanked and ability to add those additional services that people are not able to gain access to. I mean, I personally see it as a great way of opening up the ecosystem.
Okay, 2 more to go. Jamie.
Two more to go. Yeah, let's go to one of two YC-backed startups who raised funding this week. So we're going to talk about Ziina, UAE-based, have raised 22 million in Series A funding, and a round was led by US-based Altos Ventures. Was also joined by Avenir Growth, Y Combinator, MEVP. I'm noticing a trend, Ahmed, amongst our guests that the week after they are on the podcast, they announce.
They announced their deals.
Like,
okay,
yeah. So Hasan, if
we
there's
should go
anything
back
coming
in
up.
time.
Yeah. I mean, this is happening. This has happened. I think it's the last 4 weeks in a row. So
Yeah.
I mean,
Yeah.
there's a trend here for sure.
Hasan, please announce today.
We've done like 5 investments last month. We let the founders decide when they want to announce. I don't know.
Yeah.
There might be some.
Makes sense.
The startup itself was founded in 2020. Initially started as kind of a social peer-to-peer payments app for consumers, but the business vertical has grown pretty considerably, I think, over the course of the last couple of years. I guess there's three kind of components to that. You have the payment sort of gateway online for merchants, you have the actual in-store POS, and then you also have payment links, which is kind of via socials. In terms of annual revenue, supposedly it's grown tenfold over the course of the last 12 months. And Takatkah, in an interview that he did with TechCrunch, said that they're processing over 300 million across business and personal segments, which is up 150 million last year. The other key thing here, the most interesting thing, was that they claim to be the first venture-backed startup with the stored value facility license from the Central Bank of the UAE. In terms of expansion, obviously offerings are in UAE at the moment, but they are looking at Saudi and Jordan over the course of the next 12 to 18 months.
Ziina is more like Venmo, Zelle, and in Jordan we have Click. As you mentioned, Jamie, they're expanding into much more payment and financial services offerings. What's the business model for these companies? How do they make money? If we talk first about the peer-to-peer payment and then the other services they're planning to launch.
It depends. Usually you get some sort of interchange. A lot of the fintech companies in the region have been relying on interchange, which in our region is actually pretty good as a revenue source. In other markets like the US, it's not so great, and can be killed at any point in time, and it's very low. But in our region, interchange works really well. So interchange is basically when money is going from one party to another. Usually there's a percentage that's charged on that transaction when it's a purchase or whatever, and out of that percentage is usually called there's an interchange fee that gets paid, between the banks or between the credit card companies or whatever. So a lot of startups in fintech are doing that, and then the other way that they do it, I guess, there's like, if you're storing people's money, you have the ability to start making some money on the float through interest, which also works in some cases. And then the other business model is basically just a subscription fee, right? Like, hey, you want access to our better services or more transactions or whatever, pay a subscription to get the gold package or whatever it is. So those are generally the business models that we see.
Yeah, and on the interchange, actually, we do have information on that. So it's 2.9% for businesses, plus 27 cents for every payment gateway transaction, and then it's 2.6% for every other payment method.
Yeah, and usually startups get like half of that.
So, Karim, Kevin, for Ziina to transition from payment-focused platform to now a full-service financial provider, it comes with regulatory and operational complexities, right? Like, two questions here. First, what licenses do they need to do all of the planned services? Are they going to obtain them or acquire or merge? Like, we're talking about acquisition now. Are they going to acquire with this new funding smaller companies who have already obtained licenses? And second question would be, who will be Ziina's biggest competitor in the region? If you can mention specific names.
I'm passing on this to Kevin.
Yeah, I was also hoping, Karim, maybe this would be on you, because I'm not too close to the actual licenses obviously required, but we know that there is as you mentioned, a long period of trying to get and adopt these types of regulation in various different transitions during their periods of their acquiring or looking to other markets. So without going too much into the licensing details, there's always a lot of peer-to-peer payment apps around in the region that are potentially their competitors. You mentioned Ahmed in Jordan, Tweeq, and obviously Karim Pay across the region is another potential. I think STC in Saudi, and Karim, maybe you can think about some of the things that maybe that comes up as well. And Yap, right? Yap have been around for a long time here in the UAE specifically, and targeting maybe the same segment of tech savvy millennials and expats, giving that sort of digital first banking services.
Look, the licenses here in Saudi is going to be probably a bit different than the UAE, because honestly, I don't know enough about Ziina to comment at the stage. And I'm looking a bit at what they're doing, and it seems like probably somewhere between an EMI and probably going to require a couple more licenses to offer everything that they want to offer.
Okay, last story for today. Jamie, what's happening with Malaa?
Yeah, let's wrap it up with another fintech. I mean, geez, who would have thought?
I mean,
Fintech
week.
You'd think that maybe there's a big fintech event taking place in Saudi.
I mean, there could possibly be.
Have you heard of anything?
Yeah.
Have you heard of anything?
I wasn't at it, so I mean, it couldn't have been that big a deal. So I mean, I don't know. But yeah, so as you mentioned, Ahmed, Malaa, they've raised a Series A funding round, 17.3 million. Some of the usual suspects here: Impact 46, Daria Financial. Founded in 2021, it's sort of a wealth management tool, so you can track your manage and track your money, expenses, investing, etc., all in kind of one unified place. So all your multiple bank accounts centralized. So in terms of what the funding is going to be utilized for, launch a new range of investment and savings products with other various undisclosed features.
So we were talking about Ziina and expanding into different markets. They need licenses, etc. The biggest advantage for Malaa, it seems, that they have license from both SAMA and CMA. And the product offerings, they offer personal finance and savings management. And as you mentioned, Jamie, investment management or investment products. It's kind of a wealth management platform. It's more comprehensive than many others.
I'm biased on Malaa, obviously, but
Okay.
just because they're based out of Saudi. I see Hasan smiling. I don't know why, but yeah, we're excited about this. Honestly, Malaa is sort of offering a full-fledged solution for consumers at this stage. It's using open banking. It's giving personal save. It's offering personal saving and offering the investment. And they've gone through the regulatory route, and it's not easy to get 2 licenses from 2 regulators in Saudi Arabia. And getting the CMA license for, I think they have advisory or robo advisory, and the SAMA license as well, and offering open banking as a solution, or utilizing open banking as well to consolidate all your accounts under one application. I'm sure with the amount of information, the amount of data, and the customers that they're acquiring, they will come up with a new products and features that are going to be.
Okay, let me push back a little bit, Karim.
Go ahead.
Do you think really people want to have everything in one place, or do they want to keep their savings and investment separate?
Look, they still are separate to a certain extent, because you get an overview of all your bank accounts. I mean, right? So you're pulling that information. They're still in different bank accounts. You get them under one in one view, and whether you want to keep all your investments in one place or not, that's a different idea. You can have a portfolio with Malaa, but you can also have a portfolio with a traditional bank. That is, if you don't have a portfolio outside of Saudi Arabia or outside of the country in general. But having that consolidated view in Saudi Arabia for now, I think consumers would like that. There's also the educational part that comes with it. The savings in general is something that is still, in my opinion, needs to be like, there's a learning curve for the consumers to learn more about saving and the importance of saving. I think Saudi Arabia has some of the lowest rates of savings when it comes to consumers in general. And applications like that facilitate such things and educate the consumer. So I think I see it as a great thing, and we're super excited about that. I'm super excited. By the way, FYI, just as a disclaimer, all thoughts that have been provided on this podcast are my own, no one else's. And I'm not. It's not Fintech Savvy or anyone else for that matter.
Kevin, Hasan, what do you think about Malaa?
I think it's great. I think they've been able to raise a good amount of funding. It seems like a pretty solid team that's behind it. I hope they do well. I think there's a lot of areas that banks have not really done very well in over the past 10 years or so. And I think we're seeing an increasing fleet of startups come in and sort of plug in those gaps. I'm just concerned because I've just like over the last week seen like 10 or 15 robo advisors, right? And like there's a bunch of them all getting licensed and starting, and all of this wealth management stuff is happening. I wish investors were a bit more thoughtful in not investing in the same thing as like a bunch of other people. Like it's like, I don't know, like just a thought, like maybe there shouldn't be 15, 20 players and doing something, and the only person that benefits from all of that is Google AdWords and Facebook marketing, because they're all going to be bidding against each other.
How many more do we need of payment companies, wealth management companies, robo-advisors? I mean, and in the event, the startup pavilion, we have so many companies in there, and many of them are similar to each other or similar to bigger companies, right?
Yeah, I think there's a lack of imagination, I think, with investors in general. I think, oh wow, yeah, that company just raised $5 million. Let me go and invest in a company that's doing exactly the same thing. They'll also raise $5 million. No, that's not how it works. Like it's, you're just like shooting yourself in the foot if you think like that. So I think we need a bit more imagination when it comes to both investors and founders to a certain extent as well. I mean, there are times when all of a sudden, like around the region, we will see 10 players emerge doing the same thing all across the region, but they all emerge at the same time, not knowing that there's other people playing. And we see these cycles quite a lot. Like we've reviewed like almost 4,000 deals over the last 2 years. And so we see it like, did you know about this player in Saudi? No. Did you know about this player in Egypt or UAE? No. So they all come out at the same time. But then there's a second phase of like these come out and then everyone's like, oh yeah, that sounds like a great idea. Like then they raise some money and then, oh, let me do that as well. So the second phase of that is the part that's broken, right? So I don't know. I think there's too many wealth managers. I think at some point there were too many of these like crowdfunding platforms that existed in Saudi. Sure, it's survival of the fittest and whoever can raise the most amount of money and stuff. But until that happens, there's a year or two of complete mess where everyone's just sort of like, everyone's trying to raise at the same time. Everyone's investing in customer acquisition at the same time. And so everything just doesn't work. So I don't know. Just
reminds me. What you just described reminds me of the burger shop craze and coffee shop craze that how everyone wants to have a burger shop or a coffee shop. But no, look, I agree with that. I think it's not just the investors, right? It's also the founders. They need to start thinking outside of the box and looking at what solutions are being offered, and try to add on to that rather than replicate. There's a lot of replication happening across the ecosystem.
Yeah.
Not just in fintech, by the way. I mean, we see
it
in
every
different in everything, right? Exactly. But no, I agree with you, and I think it's a progression. Like in fintech, it's a progression of the ecosystem. We'd like to see a lot more innovation happening. There's sectors that are untapped. RegTech is untapped. InsurTech, very little happening.
InsurTech is hard.
Yeah,
and no one wants to do it because
it is hard. It is hard, but
and the regulations aren't so clear. I think one of the other things is like once the regulations are clear for something, a bunch of other people come into whatever was there. So I think that's also something to watch out for. Like there's a lot of startups that maybe want to do something, but it's hard to get regulated or it's complicated. And then once they figure it out and everything's clear, then a bunch of other people like, oh yeah, this looks easy. Let me just do that as well.
It looks easy.
You don't think we'll end up with the consolidations that we've been seeing, Hasan? Back to the first news article. Is it going to lead to more consolidation or more companies dying off?
And I think more companies dying off. I think, well, if they're all emerging at the same time, all raising around the same amount of money, I don't think there's going to be consolidations and mergers and acquisition. I think it's going to be a few of them are going to win, if a lot of them are going to fail. So if you're an investor, probably better not to invest in something that everyone's doing at the same time as well.
Good idea.
Just a
Just a
thought.
thought.
Just a thought.
I think maybe just on the end user as well, right? That a lot of the solutions are actually forgetting about the end user in that race to get there quicker. Whereas, as quite rightly we've mentioned, the ability to have one solution, whether it's your money or whether it's your investment in one place, is great. But then there's the added stigma around, digital banking and the traditional bricks and mortar, and also how easy it is from transferring one to place to another, right? You have to also think about, going back to Karim's point about the educational part, it's just how do you get access to financial products very quickly, and if you aren't able to, you could lose money very quickly also. So there is, from a personal perspective, in terms of a user, I think a lot of the founders and companies need to also just go back to who is actually their end customer and think about that experience as well.
To wrap it up, I have one last question. Today we talked about Tabby, Tarabut, Ziina, and Malaa. We know Tabby is already a unicorn. Which one of the other three do you think has the best chance of becoming a next unicorn in MENA, the next fintech unicorn? Tarabut, we're talking about an open banking enabler. Ziina, peer-to-peer payment, but also now expanding to other financial services. And Malaa, we talked about, they have a kind of a comprehensive solution, personal finance, savings, and investments.
Why do we have to choose? Why not all of them? Let's hope they all do.
Oh, okay. Very optimistic. Nice. I love that.
But honestly, they're all great companies. And those companies are all great companies. They're all doing great stuff. They all have potential. So why not?
It's not like,
I was also thinking how you would like me to choose, because I was thinking about the for and against for all of them, but actually they're all pretty good, right? So from
for me, honestly, I'm very excited about open banking enablers. Like we can see a success story like Played in the region. I think that would be a big competition here between Tarabut and some other players in the market.
I think it's Tarabut, Lean, and Spare are the three that we've been seeing emerge. So I've invested in a few companies, so also I'm an investor in Lean, by the way. So it's just as a FYI, just a couple of investments we've done. But I hope all of them become unicorns. Why not?
We need more unicorns anyway.
I think we need more exits, by the way, Ahmad. Not just
more exits and more IPOs. Exactly.
What happens when they become unicorns? Like, who's going to take them? Is it all IPO, or who's going to take these companies over?
I don't care. I'll sell to the investors coming in when they become unicorns. I'm a seed investor. I'll make my money. I don't need to wait until they become IPO or whatever.
Secondaries,
I'm selling secondaries. I'm doing well. 30x, 60x. That's enough.
Wow.
Beautiful.
Easy.
Easy. Well, again, Hasan, Karim, and Kevin, thank you so much. It was a very focused on fintech episode, and I think we had valuable insights from all of you. Thank you so much.
All right.
Thanks very much, guys.
Thanks a lot, guys.
Take care.
Thank you.
Bye.
Thanks.
Thanks for your time.